how has the unfolding balance of risks on the supply side changed the narrative for you, Vish? We had a settlement with the ILA and the USMX until the next dispute, that is. But we have the Middle East on a knife edge. That clearly has inflationary implications, and we haven't even reached the outcome of November the 5th, whether it's Trump or Harris. Tough on China is a bipartisan position, issues for supply chains, issues for the deficit spending as well.
No, that's really a good point. And you know, I did not think that I needed to grapple with this so early in the Fed cut cycle. My sense was this was a problem that they could defer to late 2025, 2026, when they consider that structurally inflation might be higher. That's the new geopolitics of it. My sense here is that it's going to incrementally shift the Fed dynamics, where the Fed's primary position now is we are willing to look past geopolitical shocks. We are willing to look past the one-off effects of supply kinks that can, in theory, be ironed out within the confines of the US. You know, unlike and in contrast to the pandemic, which was out of everyone's control. So I think that they could make that distinction and to keep with the cut cycle, but that's going to lead to a bumpier expectations and cut gap whilst we get into early part of 2025, which is why we're not sold on 50 basis points all the way through for this year, even though I think the Fed will have to cut more and sooner than the dot plot has suggested.
So, Vish, here's the thing, right? We've just been talking about the Fed, and rates have begun a big rate cut. First, a fresh rate cut cycle with a 50-pointer. Who knows, right? Maybe 25 is next in November. But when you take a look at the stock market, right, earnings expectations are pretty, let's say, well, they're certainly positive. They may be even a little ambitious. Folks are penciling in double-digit earnings growth. And if it delivers, great, right? SPX 21 times forward, okay, maybe it stays there or even goes higher. But if the market is penciling in double-digit earnings growth, why has the Fed started cutting rates? I mean, if the business cycle, the business outlook is so good.
No, that's a wonderful point.
You know what I mean?
Yeah, no, I don't know why, but I know what you mean.
Yeah.
So the thing here is, I think we've come to a point where earnings were able to exploit completely the inflation cycle, the post-pandemic deprivation, and all of that to really stay on track. And in the initial phase, some of the layoffs that we see that are not yet displacing optimism could also add to that earnings cycle, because naturally it's going to lead to a better bottom line. But I think in the longer run, gravity must hold. Markets may not be wrong if they took a much longer timeline, in the sense that, you know, equity markets fully price in two things. One is inflation, because equity markets are nominal. The other is the dollar debasement effect. So yes, must equity markets go a lot higher to make sense? You bet. That's a 10, 15-year view, 10, 20-year view. But this current cycle, something probably has to give. And the question really is at which point and by how much. And those are questions that are very hard to answer, given, as Ms. Sam alluded to earlier, the US economy is a huge, unwieldy beast, and getting a sense of it is going to be really tough. In cash flow terms, though, we do think that household spending will be slowing down significantly. And I think that would be the lead indicator for the Fed to start cutting by more, even if there are some other spots in the economy, including financial markets, that suggest they're healthy.